Welcome to UK Property Accountants, UK's leading property accountants and tax specialists. In this video, we'll break down the hot topic, making tax digital for income tax, and explain what it means for UK landlords like you. Making Tax Digital, MTD, is a UK government initiative to transform the tax system by going digital. It's about moving away from paper forms and towards digital record keeping and more frequent reporting. Businesses must use compatible software to maintain records and file taxes. HMRC states that the main goal of MTD is to make tax administration more effective, more efficient, and simpler for taxpayers. MTD is being rolled out in phases. It began in 2019 with VAT. By 2022, all VAT-registered businesses were required to follow it regardless of turnover. MTD for income tax, also called MTD for income tax. Income tax self-assessment is being rolled out gradually, depending on your qualifying income. That's your total gross income from UK or overseas property and/or self-employment. Here's when it starts. Over £50,000 from April 2026, £30,000 to £50,000 from April 2027, £20,000 to £30,000 from April 2028. Income from PAYE, dividends, savings, or partnerships doesn't count toward the MTD threshold. Under MTD, landlords must follow 3 key steps. 1. Digital record keeping. Use software to record the amount, category, and date of each property income and expense transaction. Second, quarterly updates. Every 3 months, you submit a summary to HMRC. No tax adjustments needed at this stage. If you have multiple income streams, such as rental income, self-employment income, you'll need separate quarterly updates for each. After each update, HMRC sends a tax estimate, so you can plan and budget ahead. Quarterly tax payments are not required under Making Tax Digital. Only quarterly updates must be submitted. Tax is still paid annually by the 31st of January. Third, final declaration. At the end of the tax year, you review your full records. Apply any tax or accounting adjustments. Claim reliefs and allowances. Then, submit the final declaration, replacing the annual self-assessment tax return. And pay any outstanding tax by 31st January. Own property jointly? You can choose to report the full income and expenses for the property, or just your share of the income, and leave out expenses. But if you don't include the expenses during the year, you must report them before your final declaration. Your quarterly updates must always include your share of income from jointly owned properties and full income and expenses for properties you own individually. So how is MTD different from what you're doing now? Let's compare. Current self-assessment process. Keep property income and expense records during the year. File tax return once a year, usually in January. Include all sources of income, including savings and dividends. Submit your tax return to HMRC by 31st January. Pay any outstanding tax by 31st January. Making tax digital process. Record property income and expenses quarterly. Submit quarterly updates via MTD compliant software to HMRC. HMRC provides a year-to-date tax calculation based on submitted data. At year-end, declare, including all other income sources such as dividends, savings, and claim any reliefs or adjustments. Submit a final declaration and pay your tax by 31st January, just like before. Unlike the current system, missing a single deadline under MTD doesn't lead to an instant fine. Instead, you get 1 penalty point per missed deadline. When you hit 4 points, you'll be fined £200. Points expire after 24 months, so the occasional slip-up won't hurt long-term. UK Property Accountants is here to guide you through making tax digital, from setting up compliant software to managing your submissions. Start with a free 15-minute discovery call with our property tax specialists and get personalized guidance to stay compliant. Avoid penalties and stay ahead of your tax obligations. Book your free call today and get MTD ready with confidence.